In the world of high-stakes investing, many names come to mind: Warren Buffett, Charlie Munger, and other high-profile figures. Yet, there's one investor whose story is both fascinating and relatively unknown: Li Lu. Known for managing a staggering $15 billion and delivering nearly 30% annual returns, Li Lu operates largely in the shadows. His journey from the chaos of the Chinese Cultural Revolution to becoming a revered figure in the investment world is not just remarkable, but full of profound lessons. Li Lu's saga begins on April 6, 1966, in Tangshan, China. This was a turbulent period marked by Mao Zedong's Cultural Revolution, aimed at eradicating capitalism from the country. Amidst this upheaval, the city of Tangshan was struck by a catastrophic earthquake in 1976, a disaster that destroyed 85% of its buildings and claimed over 300,000 lives. Li Lu, then just a child of 10, survived this tragedy, which was emblematic of the profound shifts China was undergoing, both politically and economically. The earthquake was more than a physical disaster. It symbolized the seismic shifts in China's landscape. It marked the beginning of a series of reforms that would eventually lead to the country's dramatic economic transformation. Li Lu's path to becoming an investing powerhouse was far from straightforward. What makes Li Lu's story particularly compelling is not just his success, but the dramatic and arduous journey that led him there. From fleeing political persecution to becoming a titan in the investment world, his life story is a testament to perseverance and adaptability. It serves as an inspiring example for aspiring investors everywhere. In the mid-1980s, the world was changing rapidly, and so was Li Lu's life. Originally a physics major, Li Lu made a pivotal shift to economics during his fourth year at university. But it wasn't just academics that were transforming his life. Political upheaval was also shaping his journey. Li Lu found himself at the heart of the infamous Tiananmen Square protests, a student-led movement ignited by the death of pro-reformist CCP member Hu Yaobang. China was experiencing a period of rapid economic growth, largely driven by reforms and increased foreign trade. Yet, this prosperity was unevenly distributed, leaving many behind. For the younger generation, the movement symbolized hope and dreams of a better future, but it also brought significant fear. The Chinese government, under pressure, imposed martial law and deployed the military to quell the protests. The response was brutal, with estimates of thousands of innocent lives lost. For those involved, the consequences were severe, including arrest and persecution. Li Lu's role in the protests made him one of China's most wanted students. His face and name were plastered across media outlets, from radio broadcasts to posters at train and bus stations. With the threat of severe repercussions hanging over him, Li Lu went into hiding. During this perilous time, he connected with a smuggling network that helped students escape the country. Despite the dire situation, Li Lu managed to secure a path to freedom, but it wasn't without its hurdles. At the time, many countries, including the United States, were reluctant to offer asylum to the fleeing students. France, however, was an exception and agreed to take them in. Li Lu found refuge in France before eventually making his way to the United States, where he enrolled at Columbia University in New York. Li Lu's early life was marked by challenges, but fortune seemed to finally smile upon him. Although he had secured scholarships to attend Columbia, he still faced significant financial burdens. In a stroke of luck, a classmate mentioned an upcoming lecture at the business school that could offer insights into making money in America. Intrigued, Li Lu attended the lecture without any prior knowledge of what to expect. To his astonishment, the speaker was none other than Warren Buffett, a man who had already amassed a fortune through his investment acumen, but was not yet a household name. Buffett's presence was an unexpected twist of fate for Li Lu. The lecture was transformative. Buffett shattered Li Lu's preconceptions of the stock market as a cutthroat speculative arena. Instead, Buffett presented a view of the stock market as a place to acquire ownership stakes in businesses, a perspective that resonated deeply with Li Lu. Buffett's philosophy was clear. Investing wasn't about chasing stock prices or engaging in speculative trades. It was about understanding and owning businesses, investing in them with a long-term perspective. This revelation was eye-opening for Li Lu, offering him a new framework for viewing the financial world. In 1993, a pivotal moment in investing began with Li Lu's deep dive into the concept of intrinsic value. This idea, championed by Warren Buffett, revolutionized his approach to the stock market. Buffett had a simple yet powerful belief. Stock prices behave differently depending on the time frame. In the short term, prices are like a roller coaster, influenced by every market whim, investor sentiment, and economic or political shifts. However, over the long haul, stock prices tend to align with the intrinsic value of the underlying business. Li Lu became captivated by this notion. To him, intrinsic value wasn't just an investment principle, it was an obsession. He immersed himself in studying the investment strategies of Buffett and his partner, Charlie Munger. By the time he graduated in 1996, Li Lu had already put these principles to work with astounding results. Despite being a student burdened by loans, he cleverly invested the float from his loans, money he had before he needed to repay it. And by graduation, he had amassed a cool $1 million. Li Lu's academic achievements were impressive. He completed his bachelor's in economics, an MBA, and law school, all simultaneously. Yet, his focus remained on investing. After 2 years in investment banking, he took a bold leap and founded Himalaya Capital in 1998. This was during the tumultuous Asian financial crisis, a period of severe economic turmoil that hit Southeast Asia hard, forcing countries to devalue their currencies and triggering widespread financial instability. For Li Lu, this crisis was an opportunity. As stock prices across the region plummeted, he saw a chance to invest in businesses trading below their intrinsic value. He focused on identifying great companies, those with high returns on invested capital, but not just any companies. He looked for those with a significant competitive edge, or what's known as an economic moat. An economic moat is crucial in the investment world. It's a feature that allows a business to maintain its competitive advantage over rivals. Just like Nike stands out in the crowded sportswear market due to its brand and cultural impact, Li Lu's approach emphasized understanding each company's unique moat. It's not a one-size-fits-all scenario. Each industry and company has its distinct factors, and identifying these is key to successful investing. This requires a blend of generalist and specialist skills. As a generalist, one must have a broad understanding of various industries and business models. As a specialist, however, it's crucial to dive deep into specific companies and their competitive advantages. In summary, Li Lu's investing journey is a compelling narrative of how understanding intrinsic value and economic moats can lead to remarkable success. From his early struggles in China to his strategic investments during the Asian financial crisis, Li Lu exemplifies the power of value investing principles. His story underscores the importance of looking beyond short-term market fluctuations and focusing on the long-term value of businesses. For those navigating the stock market, Li Lu's journey offers invaluable lessons in perseverance, strategic thinking, and the enduring impact of sound investment principles. Thanks for watching. Please like the video, subscribe, and share your thoughts in the comment section.